welcome to India Market Open. It seems like it's been, fortunately, a peaceful weekend when you look at Iran and Israel. Crude is under control. The pullback rally back home on Friday was very impressive. So it seems like we are off to a good start to the week.
Yeah. The strikes, if any, happen on Nvidia and not thankfully on the geopolitical
like, did I miss something?
No, just that. And thankfully, geopolitically, all is well. I mean, not just from a market perspective, but even otherwise. You don't want this conflict to escalate.
It kind of, on the show on Friday, when we were all speaking, that's when it all sort of played out.
Yeah.
But that was the fog of war, which now it's clear what has happened. Both sides have tried to sort of pull back and got positions where they can tell their, constituencies that humne kar diya, so now no need to escalate. And the world is happy, everyone's happy, let's hope it stays that way.
Yeah.
So that sort of played out. Mixed cues, though, I would say, globally. And if you look at how the US was, Nasdaq was hurting. The strike was on Nvidia, as Niraj was saying. So mixed trade on Wall Street, and Nasdaq was leading those losses down about 2%. What is seeming to happen is that a rotational play out of the whole AI drive is playing out. So you had stocks like Nvidia down about 10%. You had other players also hurting. SMC was down 23% on Friday's trade in the US. So that's where the pain really is. This entire week is going to be about the mega cap results as well. So Microsoft, Alphabet, Tesla, how are they doing? Meta. By the way, Tesla really in focus and interesting to talk about as well. Elon Musk has postponed his visit to India, was supposed to kick off from today, saying he has to focus on all things Tesla, and rightly so, perhaps from a business point of view. He's had to cut prices of his key models as sales are dropping. So Tesla is hurting. Perhaps not the best time to come into a large market and say that I'm going to do X, Y, Z when you need to fix your ship at home. So, Tesla numbers are going to be important. Bonds are hurting, though, and 4.65% on the 10-year Treasury. So geopolitical fears, though calm for now, remember it's still bubbling underneath the surface. So that's a wait and watch. Plus, consistent Fed seniors and Fed official comments that are pointing to end of calendar year or early 2025 rate cut kind of timeline has kept the bond scenario a little iffy, I would say. Look at the pullback in crude, and that's reflecting really the relief that is playing out from de-escalation, at least for now, between Israel and Iran of tensions. It also brings to mind the question that what is the inherent demand situation if you can pull back 3% after a little of that tension eases. I would just say Asia is looking fine. We're looking like we're going to see a relief rally this morning, and that's really clear from our implied Nifty as well, that perhaps you're going to have a good morning and a good pullback, about 147 points perhaps up. I want to pull up the fund flows because I found this figure interesting. There was so much fear on Friday on what could happen next that you really saw volumes dry up almost, very, very tiny volumes. FIs were buying measly amount compared to what we see in the markets right now. But hopefully some of that fear has eased.
Yeah, and maybe the FI number has to do a lot with what HDFC Bank did on Friday, to be very honest. And maybe the options data. I was talking to some traders in Friday at a gathering that one of the investment banks had thrown. And the call was that the way the HDFC Bank calls were getting unwound, because there's so much of short position built in, that they had predicted, they said that we predicted at the start of the day, a trader predicted at the start of the day the HDFC Bank could see 2.5% uptick because of the buying that was coming on the screen. I don't know if this FI buying has got to do with that or some block deals, to be very honest. But anyways, the trade set up for the day. The good part was that while Nifty and Nifty Bank retreated until Thursday and Friday morning, two support lines, they respected those support lines, and which is a big positive. 22,000, the line in the sand for the Nifty. Remember, the call options were the highest at that point of time in Friday's session. 1.82 crore contracts written on Thursday, and therefore this was a big positive that the support lines were respected. And frankly, guys, if you look at what Nifty did versus what the EM index did or the Asia ex-Japan index did, quite brilliant. Massive outperformance last week at a point of time when the whole of the world markets, because of the geopolitical stress, were coming off. Nifty stood resilient relative to almost all the indices. So that was a big positive as well on the index front. And you take heart from the fact that we'll start off higher today because Asia ex Japan is doing well. And in terms of sectors to watch, one, the FMCG index, YTD, has lost 7%. It's a crucial week, this one, because there is Tata Consumer tomorrow, there is HUL on Wednesday, there is Nestle on Thursday. So 3 large Nifty FMCG staple companies coming out with results. Watch out for the FMCG index. If the commentary and not just the performance around demand from these guys is positive, that could be a big thing for FMCG stocks. So watch out for that one index. And while metals have got the global tailwinds around growth, somehow something tells me telecom still remains the sector to watch out for this week. The Vodafone FPO closing today. Bharti, what it has done the whole of last week, amongst the best performers. Indus Tower rocking as well, could be a very interesting pocket to monitor.
I'm going to add my favorite piece, which is defense. They might continue to do well this week as well. So that, remember, the PSU Defense Index is up substantially over the last couple of months. And even on Friday, before the market staged that recovery, your defense players were already leading the way in terms of buying at low levels. But let's just spend some time on this big debate on social media regarding option trading. And I think it's got my attention because this has been happening for decades together. High frequency trading is a very popular algo trading mechanism which financial institutions or institutions with the power of money have very easily managed to have it work in the favor. But we talked to a whole bunch of analysts, FNO traders, option traders, and most believe that no matter who emerges victorious in this legal battle in the New York courts, it's not going to impact the Indian equity derivative market. It has kicked off a very heated debate, like I said, and market experts are accusing quantitative algo trading firms, quant algo trading firms, in misusing their technology or their power to, of course, skew the market against retail investors. But remember, option trading was never built with the essence of retail investors trying to make money off it, right? And unless there's any way to prove that this technology or these systems are built to deliberately sabotage unfair price discovery or work against retail investors, not much could be expected on that front. But just to put some numbers, and I think this is exciting, Indian equity derivative markets have seen volumes which are 400 times that of cash market versus what you see in other developed markets. In other markets, the derivative market volumes stand at 5 to 15 times that of cash market. India is at 400 times. So that just goes to show you the kind of play that's taking place in the Indian equity derivative market. Apart from that, these are, remember, powerful computers that execute trades. So they completely ignore fundamentals. All they do is have huge volumes and trades which take off or are executed in lightning speed. So that's what you want to keep in mind. Locally as well, so while you have the Jains and Millennium Investments of the world, locally you have the likes of Graviton Capital Research that actually is leading the way. But we'll talk about this at some stage through the day. But important in context of just marking it, because I think this was something that the press, social media was focusing on all weekend.
Samina, that was also because of what happened on Thursday and Thursday and Friday, and the move which left a lot of Indian option traders and retail traders hanging high and dry. And then this whole thing about Jane Street also having an Indian play is leading to the social media chatter. But tread with risk when you go into this space, no, I suppose.
Just my limited perspective out here is that we know that options trading has been around for decades, right? And institutions are making a killing. Just the fact that the tax advantage that some of these global companies now have and the access that they now have to the Indian markets in trading makes it a bit of a not so level a playing field. And that is where the issue comes in. Even for a Cat 3 AIF in India, subject to 39% taxation. But on the trading side, on the global front, if you have that tax exemption because of treaties done, it just makes it a not so level a playing field, which is what people have been complaining about now.
I mean, and I think the only one on the receiving end is retail investors. But there's nothing unfair in that sense.
The tax advantage is unfair.
Which is regulated, which has got nothing to do with a retail investor or an institution. And just to put, we've talked about the likes of Jane making $1 billion in profit. I don't know if you guys have heard about Graviton Capital Research. So they're a small Bangalore-based, I shouldn't call them small anymore. Their top line has tripled in 3 years. So they reported a top line to the tune of 3,500 crores. And these are prop books, right? So they don't do this on behalf of clients at all. And they clocked in a profit of 600 crores. This is a nobody. We don't even talk about players like these, but those numbers are significant. QE Capital to add to that list. So they've got about 2 or 3 rather unknown, insignificant players in the algo trading space that have made humongous profits. So it's not just the international FPI players that are, making hay while the sun shines. It's also local players that have managed to do quite well. And remember, all these gains have come in when the broader markets have been flat. Just goes to show you the power of AI and computers and technology, right? So significant gains with insignificant movement on the benchmark. But like I said, we will delve in this a little bit more if it has any impact, but it was just interesting to mark this morning. But very quickly, let's move back down to what matters this morning the most, and that's going to be, I think, HDFC Bank. It did see a sharp run last week, so it's up about, 10% in the last couple of weeks. But what is worth noting is those numbers. They do seem like a mixed bag, in my opinion. On the face of it, it's a good set of earnings, but when you delve a little bit more into it, it seems like a lot of it was marred by one-offs. Brokerage is not disappointed, and I think that's what the street will take heart from. But a stock reaction is very unlikely, and that's largely because the counter already ran up quite sharply on Friday when we saw all those banking stocks do quite well. But just quick takeaways, the bank has delivered on 2 key metrics that mattered the most, which is NIMs and deposit growth. Asset quality remains solid. The main concern was the lack of meaningful increase in loan yields. They adjusted for one-offs, ROAs, and marginally lower at 1.88, and profit was lower by about 7 billion rupees. But floating provision was completely in line with what the HDFC Bank has done over the last couple of years, so no surprises there, but neither is it an indication of asset quality. So watch out for HDFC Bank. We will do a little bit of a deep dive analysis with an analyst in a few minutes. Along with that, HDFC Asset Management, largely numbers were in line with what the street was expecting. Good numbers, to say the least. Wipro...
But brokerages are kind of not so bullish on HDFC. Yes. At 35 times it's all priced in.
They seem to be optimistic on HDFC Bank, which I'm a little confused about.
No, the valuations. Just that 35 times, is it all priced in? At least the Kotak note seems to suggest that, and I think the Morgan Stanley note also seems to suggest that. It's pretty interesting.
MK, on the other hand, doesn't seem too disappointed. So I think it's largely, again, not much of a reaction on earnings is what's expected. Wipro, once again, a weak quarter. Big promises. They've talked about how consulting revenue has going to go up. They said that the last quarter, and none of it was reflected in this quarter. Concerns remain. I think the big bet is on the new CEO, but a few more quarters down the line is what it's going to take to undo the sort of damage that the firm is currently witnessing. The stock, remember, will be one you want to watch out for. Brokerages on this one very conclusively maintain a sell. Some have even reduced their target price. So Wipro is not going to have a great day in trade this morning, guys.
What I found interesting is the new CEO, Srinivas's 5-point guideline for what he is going to change and what he is going to do. And what I also found interesting is that he's not rocking the boat too much. No big rejig structurally within the organization to effect that change. And it seemed fairly blue sky. Of course, Street will give him some time, to actually shake things up. Wipro's been through a lot. But that's one common theme I see. We're going to do everything AI driven, and we'll be on top of it. We'll have to wait and see how they do it.
Yeah, but the only thing is that in a period of CEO transition, and people will relate this back to what Tech Mahindra is going through, there are changes for 2-3 quarters, growth doesn't come. People will now attribute this to it. So the Motilal Oswal note says that in line of the fact that there is a CEO transition happening, it might be the lowest growing top tier IT company. So why buy into it?
But cause and effect, is that why the CEO is transitioned in the first place?
Yeah, but because there's a new CEO. Yeah, I mean, that's a belief. I'm saying that's a hypothesis that some people have. It may be right, it may be wrong.
Yeah.
So, in terms of stock performance, while the earnings have been disappointing and brokerages are disappointed or seem to be remain disappointed, it's actually not done too badly in 6 months. The stock is up 18%. Infosys, TCS, LTI, Mindtree, and I'm only comparing to the tier 1 names. They've all actually been dismal. I mean, look at Infy's performance. If you can pull that up over a 6-month period, it doesn't look good. LTI Mindtree is down 14% as compared to Wipro, who's actually lagging its IT peers. Infosys over a 6-month period is down about 1%. TCS is probably a close positive. It's up 15%. HCL is done 15%. But Wipro is up 18%, guys.
Yeah.
Since 2020, by the way, Wipro is the second best performing IT major.
So all
So it's done well.
So
on the
valuations
bourses.
now is looking also better priced. Valuations are better. I mean, like everyone else, their headcount has also slipped this time. So all said and done, Wipro is one to watch out. Maybe relatively, it might not see too much of a drubbing, but we'll wait and see. Persistent is the other one. Since we're talking about the tech pack, set of numbers that came out, and the results have been seen as fairly positive. I would say those numbers on your screen. A beat on the top and bottom line, at least. Operating margins were hit due to higher costs, etc. The professional costs have also gone up. But their healthcare segment seems to have done this time. The healthcare vertical has actually been the driver for the last 3 quarters, was up 16% Q on Q. BFSI has recovered after 2 muted quarters, up 1.8%. So despite the drop in margins, 50 bips a year on year, you might see a decent kind of a response to a Persistent today. So that's one on the list in terms of earnings impact that you could see. JFS was the other one I found interesting. Now, Jio Financials, of course, in the news for a variety of reasons that tie up with BlackRock. What are they going to do? So their numbers are okay, not bad in terms of the data that we have. Total income up 5%, net profit up 10%. That's Q on Q. But what they aim to do and what they plan to do, that might enthuse the street. So they launched a debit card. They want to use AI to, make up for the fact that they are a late entrant and tap this space. They've tied up with 29 insurance companies. They've launched the voice box also, the kind that now, of course, Paytm, BharatPay, everyone has. So they've launched that also in pilot stage in Mumbai. And I think looking at the group, the stable they're from, and the kind of scale that they managed to build, JFS is one maybe which could see some moves today. Laurus Labs was the other one. So a US FDA inspection at their API manufacturing facilities at Andhra Pradesh has closed with 0 observations. So that has been a positive for them. And that inspection was 15th to 19th. You might see some of a move in Laurus Labs. So a lot of the pharma companies have had news flow over the weekend, from Biocon to a Zydus to a Dr. Reddy's. And pharma has really been broadly an underperformer, but Laurus Labs, I think, might have a decent day.
Yeah, I mean, it's a big facility to get 0 observations. Usually we've seen stocks react. I was talking to Varsha, and it's already contributing, so in some sense not a surprise, but the fact that there is 0 observations on a very large facility, the sentiment could be positive, you're right. So certainly a good stock to keep in the mix. Just a few from my end. The GSPL, to my mind, very likely the stock of the day today, for the wrong reasons, of course. The tariffs, PNGRB has sharply cut the tariffs of a key HP pipeline in Gujarat, the network in Gujarat, by 47%. The note from Citi says that this tariff cut is 64% lower than the tariffs that GSPL was seeking. I mean, that is something, and which is why I love the lines that they have used in the note, by the way. I mean, not love it, but really they're just qualifying. Citi calls it a tariff cut, calls the tariff cut a setback of epic proportions. Well, let's see if we have an epic reaction to GSPL in the session today. And of course, watch out for Gujarat Gas, because GSPL holds 54% in Gujarat Gas. So the business doesn't get impacted, but there might be an overhang. So Gujarat Gas, but GSPL predominantly very likely to be that one key stock which will react negatively. Ramakrishna Forgings, and we spoke to the management on Thursday, wherein they spoke about an approval for supply of components to a US EV maker. They didn't name it. Presumably it was Tesla. Now it's been put on hold by the US EV maker. The stock had gained in 2 days. Let's see if there's a pullback in the stock in the session today. So that's another one to watch out for. And I'll watch out for JSW Energy, amongst others. 700 megawatt solar project from NTPC. This is large, and therefore could see a bit of a reaction for JSW Energy. It's an expensive power stock, but could see a bit of a reaction. Anything else, guys, on your radar? Lots of other stocks, of course, but
yeah.
What else?
A couple of things that I was looking at. I thought Irida's numbers were interesting in Q4. Total income is up 34% year on year at 1392 crores. Net profit is also looking decent at 33%. Irida might see an up move there. Sterling and Wilson also I found interesting because it's sounding like a turnaround kind of thing. A lot of focus on solar energy, but their order book has improved. Their revenues have increased to 1,178 crores versus 88 crores year on year. Their EBITDA is at 29 crores versus an EBITDA loss of 352 crores year on year. And net profit, they've moved from a 421 crore net loss to a 1.4 crore net profit. So a bit of a turnaround story there. We'll see if the stock is rewarded by investors for that. And of course, the big one, you're going to have Reliance results later today. So just putting out Bloomberg estimates there, revenue may rise 5%, EBITDA may fall 4.5%. Margins also could contract about 180 points, but net profit, that's just consolidated, of course, may rise 14%. I would watch out for what's happening with Jio there more than anything as well.
Yeah. Couple of other stocks which may react. UBS on Voltas. Maybe the note came on Friday because they say the closing price is 1292 and the closing price is 1300. So maybe it came during market hours, but it's an interesting note. They've upgraded the stock to a buy with a target price of 1800 versus 1300. Currently, they believe Voltas will surprise on market share in the room air conditioner segment, and the market share could actually reach 23% versus 19.5%, which is the consensus currently. So further re-rating potential. So watch out for Voltas. In case it reacts, you know why. And two other stocks, Sona BLW. While Elon Musk visit getting postponed might hit some of the stocks, do watch out for Sona BLW because it's inaugurated a new manufacturing plant in Mexico, to cater to the growing EV demand in North America, which contributes to 40% of the company's revenues. So Sona BLW could be interesting. And guys, Zomato, we use it day in, day out. It's hiked the platform fees to 5 rupees from 3 or whatever it is.
From 4.
From 4, yeah. So 25% uptick there. Maybe there's a bit of a reaction.
Yeah. We pay the platform fees eventually.
Do we? I thought the restaurants. Maybe. Yeah.
It's going to be passed
between
on.
somebody.
Zomato is not paying. They're just making. That's all we know. A couple of other stocks to mention. Niraj mentioned today the FPO for Vodafone Idea closes. To just put a number to that, they've been subscribed about 49% by the closure of the second day of bidding, which was on Friday. So you want to keep that in mind. The response has not been as euphoric as Vodafone Idea would have liked. So you want to keep that on your radar. Apart from that, we reported on the likes of Brigade last week and Mahindra Life Spaces, where those numbers have been in terms of business update have been looking pretty good. This morning we're reacting, or the market will react to Oberoi Realty. They saw bookings worth 1,775 crores in the fourth quarter with 228 units booked. For FY24, bookings stood at a record of 4,007 crores with about 705 units. So again, it's been an eventful period for most of your real estate majors. Oberoi Realty not too far behind. In terms of meetings, you've got ICICI Bank, where the board will be regrouping, or meeting rather, to take stock of the situation, and they will also consider fundraising via the issuance of debt securities, and this happens on the 27th of April. So those are a few more names you want to keep in mind. But like we said, the big story will remain HDFC Bank. Don't expect a very sharp up move on the counter, especially after what we saw on Friday. The numbers on the face of it look good, but they've been marred by a number of one-offs. But before we go to Harsh to get a sense of what brokerages think about HDFC Bank, let's listen into the company's MD and CEO talking about deposit growth and its transitionary effects, and of course what lies ahead for the bank.
While the Q4 mobilization is extremely healthy, I must upfront tell you that there are some transitory, involuntary flows that have also come in, which is obviously more than what we had anticipated. But even adjusting for that, the retail ones are rather healthy, which is there in the deck. So will I be able to maintain this kind of a momentum, etc.? As you know, you take a long-term average of over 6 years or so. There is a certain proportion of total deposits which come in Q1, which is probably the lowest as a proportion. Q2 and Q3 are more or less similar in terms of proportion, and the largest part of the proportion in a year comes in the fourth quarter, and which is what we have. And this is not anything different from what we see in the banking system. This is a very similar pattern that is there, plus or minus some kind of a change.
All right, so that was the word coming in from Shashidhar Jagdishan. These numbers were watched very, very closely after I would go as far as to say, a bit of a debacle in Q3. Street, at least for now, seems to be a bit relieved. Harsh, would that be the way to look at it, looking at how brokerages are responding this morning?
Well, yes, Tamanna. So just extrapolating the point on deposits, 1.3 lakh crore is the deposit number with regard to retail deposit traction. So very strong, 1.66 lakh crore on the overall deposits count. Again, very strong numbers with one-offs, obviously, as elaborated or as pointed out on the con call. But let me quickly take it to the 4 one-offs, which Samina was earlier alluding to. One is the Credila sale. The other one is some ex gratia payments made to employees, 1,500 crore odd on that number. There were floating provisions of roughly 10,900 crore which were made, and the tax rate again this time around also saw some one-offs. So those were the 4 major one-offs which really has distorted that profit after tax number. Now, in terms of how brokerages are viewing it, bank, according to Bernstein, has delivered on 2 key metrics that mattered the most, both on the NIMs as well as deposit growth. They believe that asset quality remains solid, NPA and credit costs remaining very, very healthy at this point. The main concern, though, for Bernstein is that there's a lack of meaningful increase in loan yields. This was spoken about on the con call as well. Adjusting for the one-offs, Bernstein suggests that the ROA is at 1.88%, slightly off, but the profit itself and the ROAs are lower by roughly 700 crore given the one-offs. Now, in terms of the floating provisions, according to management commentary, Bernstein points out that they were completely voluntary and there's no indication of any asset quality problem. Bernstein gives this a thumbs up, a buy rating, 37% upside. Target price remains unchanged at 2,100 rupees. Very solid upside pointed out there. Quickly moving on, Motilal Oswal also believes that there have been a prudent deployment of the one-off gains, and that has been done to boost floating provisions. They estimate HDFC Bank to deliver 13.5% to 18% CAGR on both loans as well as deposits over the next couple of years. 16% CAGR on earnings is what they are building in. They estimate HDFC Bank's ROE to be in the 1.9 and 16% odd range, and they give it a valuation of 2.4 times FY26 adjusted book value. 1950 is the target price. Motilal Oswal gives this 27% upside there as well. Nuvama has upgraded HDFC Bank to a buy from a hold. Target price is 1760, 15% upside. At least that's how they are looking at it at the moment. They believe that the short-term price performance will depend on the consistency of quarterly earnings going forward, and they've cut EPS estimates marginally but upgraded the target price. They've rolled over the base, which is why they've upgraded target price. So 3 brokerages, 3 very different target prices and 3 very different perspectives.
So 3 very different perspectives, but suffice to say, I think it's definitely a relief compared to what was expected. Maybe that Credila sale is made this quarter easier for Shashidhar Jagdishan. So that's been a bit of sort of relief, but yeah, not too bad, all things considered.
Yeah. I read a sales note from somebody, a very senior dealer, who says that you can always find a problem in HDFC Bank results or any result if you want to. But the call is, and the call has gone horribly wrong thus far, the call is that for how long will HDFC Bank continue to trade below ICICI Bank? At some point of time, an institution which has proven itself for 25 years will show growth, and when it starts showing growth, the stock will not give you a chance.
Also, while I know we are looking at this a little more negatively as positively, one thing that we must appreciate, and we'll get some perspective on that as well, is they've seen margin recovery. I know it's very small, but given the market context, given the fact that deposits have grown 7%, loan growth has been about 1.6%, their margins have actually improved. It's only 4 basis points, but it'll be interesting to see how analysts are viewing this. And that, I think, is an important positive. While I know there are these one-offs that have been marring the results, but this is par for the course. We knew this was going to come, so it's not like HDFC Bank is hiding under a mountain. The fact remains that this had to be done, and it's being done. But very solid in terms of deposit growth. The fact that they've improved, not only held out on their margin front, but seen an improvement, is what I think the street needs to look and accept and acknowledge.
And remember, the chief complaint last quarter was the communication skills of the management.
And now they are over-communicating.
I think they have at least gone back to the drawing board, taken that on board and fixed that. So, or at least improved upon it. So that's always great. We'll take a very quick break, but on the other side, we give you the setup for the derivative segment. All of that coming up. Stay tuned.
Welcome back. You're watching India Market Open, and it's expected to be an exciting morning for the street. Let's quickly highlight all the F&O action that we're eyeing this morning and take you through F&O strategies. As always, that's what the street is currently looking like. The Nifty 50 April futures traded a marginal discount of 18 points, and you've also got open interest that's seen a 10% decline as we get into trade this morning. Friday had a very sort of exciting pullback in terms of what we saw. We recovered nearly 500 points on the day's low point on the index. The PCR also saw sharp improvement, jumped from 0.93 to 1.03, indicating that more puts have been bought as opposed to calls, and a bullish sentiment on the street. Banks led the way up, and HDFC Bank was the star of trade. HDFC Bank futures trading at a marginal premium, while open interest has declined about 13% as we see it. In terms of calls and puts, let's quickly take you through where we've seen the maximum activity. Maximum call open interest addition was seen at the 23,000 strike, and that remains an important level to watch out for the street on the upside. This was followed by 22,500 and 22,300. Call writing was seen at 22,500, followed by 23,000 and 22,600. Call unwinding, what was witnessed on the street, was at levels of 23,000. On the put side, indicating where the key support sits for the market, 22,000 saw the maximum open AI, and that's obvious in terms of this bar chart, so which is a clear level of support coming in for the Nifty. 21,000 and 21,500 and 21,800 were the next up in terms of support for the street. Put writing was seen at 21,800, like I said, followed by 21,700. Unwinding was seen at levels of 22,300, followed by 22,000. Well, market has, like I said, been seeing some more puts and being sold as opposed to calls, indicating a bullish sentiment on the street. There is a very clear expectation that we will be at a massive gap up, and 22,300 could be a level you want to track in today's day of trade. But Jatin joins in from Sher Khan with his top trading strategies this morning. Jatin, before I go into the trading strategy, a quick word on the Nifty and Bank Nifty, because Bank Nifty was the star and pretty much led the way in terms of Friday's trade, HDFC Bank in particular. So talk about Bank Nifty first, and then we'll get your strategy on the index.
Sure. Good morning, everybody. So, what we feel at Sher Khan, or what we believe our outlook for the Bank Nifty is that the recent fall that it has witnessed from 49,000 to around 46,500 odd levels, I think that the fall has been arrested at the lower end of the rising channel if we draw it on the daily charts. So what we believe is that the fall is complete, and now we are heading north. We are likely to witness some amount of positive or bullish sentiment going ahead, considering that we are in the last week of the April series expiry, and during the series has been quite a volatile series. In the last week, we saw some major or huge gap downs. Now we believe that the Bank Nifty shall be in the process of filling that gap area, which it left around 48,500 odd levels. So we have turned bullish post the fall in the benchmark that we saw in the previous week. So we are looking at bullish setups, and we are currently bullish on the Bank Nifty and Nifty as well.
Right. Jatin, maximum call OI is seen at levels of 23,000. I feel like that again has become an important level that the street will now eye. Bulls in control after what we saw on Friday. Do you have a constructive options trade on the Nifty?
See, if I analyze the option chains, we have around 3 trading sessions for this monthly series expiry. So we believe that 23,000 should not be breached in the current series. So that is why we are witnessing max call open interest at 23,000 strikes. So it looks a little difficult to scale to that level in the next 3 trading sessions. So that is very obvious. And on the upside, for the Nifty, we believe that 22,500, 22,600 is the max that we are looking out for in the next 3 trading sessions. So I think 23,000 is a safe bet for writers to sell the 23,000 strike call option for this expiry.
Right. Jatin, in terms of stock specifics, I believe you've got a bull spread strategy on M&M. You want to take us through that one?
Yeah, see, M&M in the last 5 trading sessions, we have seen that after a sharp run-up, it was consolidating in a range. In terms of price pattern, it has formed a bullish flag pattern, and we are anticipating a breakout on the upside. So the ideal way to trade this pattern would be to buy a 2100 strike May series call option, and subsequently sell the 2200 strike call option. So this spread would benefit or have a maximum profit potential of around 22,000, and a max loss potential of around 13,000. So it has a favorable risk to reward ratio. And considering that we are in the last series, so keep in mind that this strategy is a positional strategy, and we have to execute it in the May series.
Jatin, Dabur has been an interesting play. It's been trading close to its 52-week low for the last couple of days. Oversold in terms of what the charts are indicating. Are you betting on a pullback on Dabur? What is the strategy here?
Yeah, so rightly pointed out, it is trading at a 52-week low. And what we believe is that the recent pullback that we have seen from the lows is a 5-wave advancing structure. So that means that a short-term bottom is in place, and now the stock is in the process of next leg of the up move. So considering that the IVs, if we do a IV study analysis, then the IVs are low, and now we are expecting a rise in the IVs. So we have suggested a bull call spread in Dabur as well. So one needs to buy the 510 strike call option and subsequently sell the 530 strike call option for May series. And if we deploy the strategy, then the break-even comes at around 518 odd levels. So one can, play this bullish outlook on the stock Dabur with a bull call spread, and the max profit potential is around 16,200 with a max loss potential of 8,800. So it has a 1:2 risk reward, and I believe that Dabur is one stock from the FMCG spaces which is likely to have a good run up in the coming trading sessions.
We're betting on a pullback on Dabur. That's the view coming in from Jatin. Thank you, Jatin, for joining us today on the show. Tamanna, back to you guys in the studio. It's looking like it's a good morning. Jatin's also got a clear bias on Bank Nifty, on the Nifty, a pullback on Dabur, and an extension of the rally on M&M as well. So only strong positive calls coming in this morning for a change.
Yeah, I'm reminded of what actually Devina had put out last week on Friday when she was saying, and this is, even the data actually supports it, whenever there is a geopolitical crisis caused dip in the markets, it tends to not last too long. I mean, in this case, frankly, we've been lucky. I would say at this time, last Friday morning, we were worried about what's going to happen across the world, and at least for now, tensions seem to have eased for a bit. The question is for how long that will continue, and the morning is looking good. Well, focus on the big numbers really that we're going to be talking about. So we've had HDFC Bank over the weekend, we've had Wipro after markets close on Friday, and Wipro frankly is more of the same. If I look at it in the context of what TCS and Infosys are telling us, that the revenue environment needs to improve. In fact, that's what Wipro's CFO Aparna Iyer is also saying about the company's future growth in margins while addressing the media at the post Q4 FY24 conference. Listen in.
On pricing, the environment, in the last fiscal, that is for FY24, remained quite competitive. There is pressure in pricing because revenue is something that everybody is very concerned about. So the market environment is very, very competitive. There is pressure. That said, there are pockets where we are pivoting to high value transformation projects, or, Srini spoke about how consulting is going to be at the tip of what we sell. There we are able to secure some premium. So the overall, I would say there is pressure in some pockets, especially in the efficiency-led offerings, and we are able to secure premium in the newer technologies and newer areas, the newer solutions that we are taking to the market. So overall, I would say for now, it is stable, right? As far as operating margins are concerned, you spoke about 19 to 20%. Like Srini said, first of all, we don't guide for margins, and like Srini said, we right now expect our margins to remain range bound. What we have done well, though, like I said, in a very, very tough revenue environment, we have improved our margins this fiscal by 50 basis points. This has happened on the back of the excellence that we are driving in operational rigor. We have several levers at play, including fixed price productivity, pyramid, the rotation, skilling, internal fulfillment. So there are many aspects that we are working on, and we are able to see results that are playing out in our margins. So we are quite encouraged. As we look ahead, we will continue to exercise these levers and also perhaps drive synergies in our G&A spends, with our acquired entities. So those are some levers that we've been driving, and we're seeing results. And like Srini said, we'll take it step by step. For a meaningful improvement in margins, I think the revenue environment needs to improve.
Okay, well, that's Wipro. And frankly, independent of whatever has been spoken by the management, most analysts on the street are now having a wait-and-watch approach when it comes to Wipro. Let's see how the stock reacts in the session today. But by the way, it's not just Wipro. There's also one more IT name which came out with numbers late Sunday evening, and which is Persistent Systems. Now, let's go across to my colleague Puneet, who's going to talk about that, plus some other stocks which should be in focus, because it was not just a Wipro and an HDFC Bank which came out with numbers, Puneet. A clutch of other companies. Which are those?
Yeah, so we'll just start with a few business updates as well. So Oberoi Realty is the first one that we're tracking. The company came out and said that it had roughly 1,775 crores of bookings, which they saw in the quarter 4, with roughly 228 units booked. Now, for the full financial year, they said that the bookings were roughly 4,000 odd crores with 705 units booked. Now, compared to last year, this is a 53% drop, since a few of the launches have moved up in the first half of FY25. So we'll see on how the stock reacts today. The second one that we're tracking is on results, which is Irida. Now, the company has been a tear on since listing earlier this year. The numbers have not disappointed as well. The revenue is up roughly 34%, coming in at roughly 1,392 crores, while its net profit has grown roughly 33% as well, coming in at 337 crores. The one main thing was that the net NP is around 24% compared to the previous year, and has come in just around 1%. And the FY24 outstanding loan book has grown roughly 27%, coming in at roughly 59,698 crores. So really strong show by Irida. And finally, as you said, Persistent Systems as well. After TCS, this has been a second result which is positive. Revenue has grown roughly 3.6%, coming in at 2,590 crores, while its EBIT margin is down 8 basis points, roughly around 14.4%. The net profit is up roughly 10%. The company has highlighted that its attrition rate has also improved, coming in at 11.5 versus 11.9 in the previous quarter, while growth in its healthcare division has been key. So these are just a few of the business updates and earnings that we've tracked in this particular segment. Back to you.
Right.
Okay, well, Persistent Systems will come out smelling like roses, because if you look at the internals of Persistent, BFSI didn't do as badly as some of the other companies are facing. Margin numbers haven't seen too much of a contraction. The chink in the armor may have been the deal wins, which apparently are not as great as is used to be seen in Persistent Systems. But maybe Street gives it a benefit of doubt. The thing working against Persistent is its valuation.
80% in the last 1 year. That's what the stock has done up.
The sky-high valuation.
And 300% in the last 3 years.
It's done so well.
Yeah, it's done exceptionally well.
But just talking about deal wins compared to the others, where your total contract values look good but don't really convert into revenues, at least their top and bottom line is better than what was expected. But it's not just IT. Today is a day where IT and banks are both in focus. Banks, of course, because of HDFC Bank, and that would be the big story this morning, really. Bunty Chawla, AVP of BFSI, at IDBI Capital is with us this morning. Bunty, very good morning. Great to have you here on NDTV Profit. Let's talk about all things HDFC Bank. You know, the large sort of takeaway from what we've seen, what brokerages are saying so far is that this is better than at least what we saw in Q3. Would you say that's largely your view as well?
Yeah, good morning. Thank you. Yeah, you rightly said, as there was a bit of a disappointment in Q3 with respect to margins, and this quarter they have though slightly improvement, but it's taken as a positive from 3.4 to 3.44%. And the good part is that that was taken because of the improvement in the yields, because they have taken some bit of a rate hike in some of the products, which is visible in the improvement in the yields. So it seems to be though there is a competitiveness in the yield or in the asset side, but they have taken that as a positive in terms of improvement in the yields, which is reflecting in the margins. So you rightly said it's slightly better as compared to Q3 numbers.
You know, just Bunty, in terms of one-offs, whether it's the Credila sale, ex-gratia employee payments, floating provisions. Now, the question is that, is this skewing the way we're looking at the numbers right now?
Yeah, as you rightly said, but we will take it as a more positively, because if you have seen 7,300 crores of profitability from Credila, which has been utilized for much of the better in terms of floating provision, which is much higher than around 10,900 crores. And floating provision, the positive is that it does not show there has been a stress. If you have moved to the contingent provisions, then we could have seen that there has been a stress which should be utilized. But the positive over here is for floating provision, you need approval from the RBI to utilize it. And they were very confident in the management commentary. We don't see any kind of a stress for next 3 to 5 or 7 years in terms of on the asset quality. So they won't be require any floating provisions. And this gives the buffer in terms of balance sheet strength going forward with respect to balance sheet strength.
Okay, Bunty, just one thing. How are you pricing in margin recovery for HDFC Bank, considering that, liabilities, deposits, replacement happens, and this whole narrative that NIMs will contract at some point of time because of rate changes that might happen, but that assumption might now be challenged for the better part of 2024, if not the whole of 2024.
Yeah, as you rightly said, for FY25, you see they have said from FY25 onwards, you have a high cost borrowings from the HDFC Limited, which will be replaced from the deposit part. And we know deposits rates is much better than your high cost borrowings from the HDFC Limited. So that is the positive. As soon as that get repriced or replaced with the deposit rate, you will get a bump up or you will get a positive impact on the net interest margin. Though on a conservative side, currently, if you see, everybody's estimating not much of improvement. But as soon as the market gets the confidence in terms of numbers next 2 to 3 quarters, how that has been reshaping, the market will take it positively.
Bunty, what do you make of that 10,900 crores of provisions? Is that a concern? Let's not forget that they've always provided for 0.5. Even though it's a floating provision, it has and holds a lot of benefits as well. What do you make of that? Is that something you're worried about at this stage, or no surprises there?
So as I've said, the management was very clear. If we have moved to the contingent provision, see that there could be possibility of seeing some stress in the balance sheet. So they are providing it now. But as I've said, floating provisions require prior approval from the RBI to utilize it for the balance or for the P&L part. So that shows the strength, that shows the confidence from the management that floating provisions we don't require. We are just strengthening the balance sheet per se.
So, Bunty, very lastly, what is the call on the stock? When do you expect an improvement in ROA and EPS? I believe IDBI is not very constructive on the stock. So you want to give me a sense of the target price and where you stand?
We are positive on the stock as we have released the report yesterday. So we have a buy rating on the stock with a 1872 target price. But as you rightly said, the stock performance will more dependent upon the stability in the quarterly earnings. As you said, Q3 was a disappointment. Q4 is taken as a positive. So as we see the stability in the margins, stability in the profit, or in the quarterly earnings going forward, market will slowly take positively because the valuation is quite comfortable at this stage, around 2.1 time price to book on a 2-year forward valuation. So that gives us the confidence.
Okay, that's good to hear. Constructive on HDFC Bank. Remember, the stock has ran up substantially this month at least. Also on Friday, the counter was up 2.5%. We aren't expecting the counter to see a big move in early hours of trade, largely because some of those gains were already seen on Friday itself. But let's move on from HDFC Bank to the IT pack. You had disappointing numbers once again from the Wipro, stable and impressive numbers from Persistent. Sumit Pokran, VP of Fundamental Research at Kotak Securities, joins in with his view on the top-tier IT packs reporting. Sumit, good morning. I believe we've been having technical problems this Monday. But let's start with Wipro. What did you make of those earnings? They've disappointed once again, and I think unanimously brokerages continue to maintain a sell on the counter, with some even reducing the target price.
You are absolutely right. Thanks a lot. A very good morning to all the viewers. You have correctly highlighted that Wipro has not been performing for quite some time. There have been certain issues. They made acquisitions that did not turn out to be very fruitful. And we have seen a leadership change also in the recent past. So that itself highlights that the transition which they were focusing on, that has will take some more time. Now, if within the IT pack, if I look, there are two angles to it. One is the global headwinds. Clients are still uncertain about how the Fed how and when the Fed will cut the rates, and that is why there has been a slowdown in the discretionary spend, and that is why most of the Indian IT companies are getting hit in this space, particularly, which has got higher exposure. They will get more pain in the near future. However, if there are certain green shoots, if you look at the TCV, most of the companies have reported healthy TCV, which should materialize into revenue going forward. So, in nutshell, in the large cap IT space, Infosys, TCS has the potential to grow faster. Wipro, we have been negative for quite some time, and we maintain negative stance on the company.
Sumit, some people have to say that with the CEO change, there is very likely going to be a year of the lowest revenue growth for Wipro. So if that is also your factor and you already have a sell, what is the targets that you're laying out on Wipro?
See, if you look at the valuations, which is very important for us to understand whether it's a buy or sell, we have been recommending sell on Wipro for quite some time, and our target price is 440 rupees. So we're maintaining our sell recommendation. If you look at the earnings growth trajectory, we expect earnings to grow by almost 13% in FY25 partly because of low base in FY24, and in FY26 we expect earnings to grow by 7.6%. Vis-a-vis, if we compare it where the stock is trading on valuation terms, the stock is trading at 19.2 times FY25 earnings on a price to earning multiple basis, and 17.9 times FY26. Dividend yield is 0.2% in FY25. So what we are saying is that given the headwinds on the macro side and within the company, the valuations already captures most of the positives which is there, but negatives are not yet captured. Valuation looks very expensive to us. We expect the stock to underperform going forward. So we are recommending sell. We will wait for more once the transition happens, how the things pan out. Then we will review our earnings and target price. But as of now, we will wait for better execution.
Sumit, on a relative basis, Infosys, TCS, Wipro, I think broadly they're pointing to the same set of problems in the ecosystem. So that trend remains. But how would you look at them relatively, considering Wipro is not looking as expensive perhaps as the other two? Or what would be your ranking?
Correct. See, valuations if market is giving lesser valuation to Wipro, there is a reason behind it. we will have to see how the earnings trajectory look like for all the three players, and that is what investor is focusing on. If you look at TCS, they are enjoying very high EBIT margins, higher than in fact Infosys and Wipro, and the earnings growth trajectory also looks decent to us, and that is why we are bullish on TCS and Infosys for two specific reasons. What clients are looking at is cost optimization, and also the bandwidth or the spectrums of services which TCS and Infosys offers. They are going to get big time benefited once the macro environment improves. And as I mentioned, cost optimization and cost initiatives, I think they will be able to take market share from the weaker players, though, so the wallet will improve for these two companies, and that is why we are bullish on Infosys and TCS. However, we are negative on Wipro. Within Infosys and TCS, if I talk, then we are our topic is Infosys.
Infosys, TCS, Wipro is the order of preference. Thank you so much for that. Great to speak with you. We'll take a very short break, but we'll be right back with pre-open rates. Stay tuned.
All right, back with India market open, the pre-open rates and about to kick in, or in fact have started. And remember, there is a gap up that is anticipated, so keep an eye out for that. Let's quickly get down to basics while we wait for the rates to settle to try and understand what should the trades be on the indices and specific stocks. Sudeep Shah, Deputy VP, Head of Tech and Derivative Research at SBI Cap Securities, with us on the show. Sudeep, good morning. Thanks for joining in. We will start off higher, Sudeep. So the question really is, for somebody who wants to enact a trade with that 100, 120, 150 points gap up on the Nifty, is there a trade post that level at 915?
Good morning, Niraj. See, what I feel is that while we are expecting Nifty to open gap up closer to 22, 250, 22, 300 zone. Now, the highest call writer also is placed around this zone of 22,200 and 22,300 strikes. So I feel overall now we need to wait and watch, wait for a dip closer to 22,200 on the downside on an intraday basis, and then go long from those levels, because overall 22,330, 22,350 will act as a resistance. And I feel only on crossover above this zone of 22,350, a decent short covering move up to 22,500 can be witnessed. So post this gap up, I feel one should just wait and watch for 15-20 minutes, let the entire gap up say steadily cool off or at least sustain at higher levels, and then we could take the trade there.
Okay, that's fair advice too. One doesn't know how it will shape up. The Bank Nifty too could start off gap up, and let's see what HDFC Bank does in that mix. But Sudeep, before we get to specific stocks that we want to ask, a couple of ideas from your end. What are you recommending to trade?
The first stock that I feel looks good at current levels is M&M. Now, we've seen that stock was in a steady uptrend during the entire month of March from 1800 to closer to 2100 levels. And in the last 5-6 sessions, we've seen some kind of a cool off in momentum or profit booking from higher levels. But despite that, the stock was not breaching or closing below its 10-day exponential moving average. And on Friday, we've seen one more move on the upside. We've seen a strong rebound from lower levels closer to 2000 zone. And now it is on a cusp of a fresh breakout on the upside. So I feel, and even in the overall auto space, we are seeing a good traction within the four-wheeler space, Maruti, M&M, and even within the two-wheelers, it's iShares. So top 3 stocks within the auto basket, I feel, are these stocks, and out of them, relatively strong, I feel, is M&M. So this can be bought with a stop loss of 2040 on the downside and a target of 2150, 2170 on the upside. Now, the second stock that I feel could do well in the next few sessions is Bharti Airtel. Now, post a consolidation for the entire month of March and a good period of April, we've seen the stock breaking out with volumes on the upside on Thursday. And with this breakout, there is a substantial addition of open interest on the long side also, if we see the derivative contracts. So I feel this stock could do well positionally. 1260 can be kept as a stop loss, and the stock could head up higher to levels of 1340, 1360 on the upside within the next few weeks.
Sudeep, stock of the day is going to be HDFC Bank, not specifically in terms of trading. Had a good run on Friday. This morning, earnings as well, largely in line with what the street was expecting. What do you think one should do if you bought HDFC Bank on Friday? And if not, if you don't already own it, would you initiate a fresh trade on HDFC Bank this morning?
Good morning, Samina. See, what I feel is that HDFC Bank, post its gap up, would open closer to 200 DMA or slightly above that. And in the last few days, we have seen a good bit of consolidation, and this move is post this consolidation. So I feel the stock could continue trending higher with the kind of numbers that the stock has delivered. And overall, if someone is holding it, can continue holding that with 1520 as a stop loss on the downside. Post this gap up, just factoring those levels. And post the gap up, if there is any slight cool off in the stock, then this could be bought also. So I feel overall the trajectory of HDFC Bank is now headed higher. And we could see levels of 1620, 1640 in the next coming few weeks. So I feel dips could be used to be bought on the downside.
Devane Choksi as well joins in with his view on the markets and a quick preview on RIL. Devane, what did you make of HDFC Bank and what is your call on the stock?
Yes, Samina, good morning. Well, I think the numbers are pretty much in line for sure. Good part is that the bank is having the growth, the balance sheet growth, I think, both in form of the deposits, as well as I think the growth in form of the loan book. And that gives you the confidence, I think, more than 25 lakh crore worth of, I think, deposit book and around close to 24 lakh crore worth of loan book is something which I think this bank has already established. And given the kind of growth that we are experiencing in the economy and the size this bank is commanding, including each of the vertical, be it housing finance vertical, which is a mortgage business, you have the retail business, the corporate loan book business, and prime sector business. Each of these verticals, along with the fee income business portfolio that they have, I believe that I think is likely to show relatively steadier growth in the vicinity of around 16 to 18%. That is obvious and clear. Plus, the management's, I think, viewpoint that they don't want to chase the growth for the sake of growth. That means, I think, they want to be mindful about the risk element in the business. That again gives, I think, good amount of confidence. The one key figure point, I think, which I would think that I think would eventually play out well is a process under which they are distributing the loan. Can that process become a little faster, both for the corporate sector as well as for the retail sector? Should that happen, then probably I think the bank is worthy of, I think, buying further aggressively into the portfolio. As such, the downside is limited. Maybe the upside of around 20-25% is distinctly possible. If not in 12 months, I think over a period of 15 to 18 months, I think it's definitely possible.
HDFC having a good response, at least in the pre-open session so far, about 2% up on the back of perhaps better than expected numbers compared to Q3. Harsh joins us in though with the top brokerage notes in focus today. Harsh, what's on your list?
Well, yes, first off, Tamanna, is City on Gujarat State Petro. Now, this one is in focus because the PNGRB, which is the regulator, has cut the pipeline tariff by 47%, 64% below the firm's ask. So actually, they cut on the existing number. Key reasons for the cut: lower capex is what they're factoring in, higher volumes is what they're factoring in, and lower opex. First off, on the capex, they're considering 1,800 crore of future capex versus GSPL's estimate of 3,400 crore. So nearly half of GSPL's guidance. On the OPEX front as well, very similar, 2,600 crore of OPEX estimated versus the 5,000 crore claimed by the company. And in terms of volume as well, 26 MMCS SCMD was what was expected as per estimates by the company. It's come in at 31.7% as per the regulator, and therefore you're nearly 20 to 25% above what the company was forecasting. Citi cutting the earnings estimate by 25 to 27%. Now this will of course create an overhang for at least a year on the counter. Stock is up roughly 40% plus over the last 6 months itself. So keep your eye out on this one. This is definitely going to have an impact. Nomura also has downgraded the stock. 320 is the target price, 15% downside by Nomura. Kotak also downgrading it, around a 5% downside only for Kotak. Now, that's broadly on Gujarat State Petro. Quickly shifting focus on Voltas. UBS has upgraded the stock to a buy, 40% upside given by UBS for Voltas. Their earlier target price was 885, current target price is 1800 per share. So they've substantially upgraded the stock even in terms of its target price. Why? One, on the room AC as well as the Volt Beck JV, they believe that improving market share and profitability will drive the numbers going forward. The JV with Beko is expected to break even in FY26. They're expecting incremental revenue of nearly 10,000 crore in the consumer electronics segment by FY27. They're now coming to valuations and trying to break them down. The cooling segment, they've switched up the valuation. It was earlier at 35 times, now at 55 times. And on the Voltbeck JV, they're valuing it at 4 times price to sales versus the 3 times earlier. And therefore, the upgrade in the target price to 1,800, 40% upside. It's up nearly 5% in pre-open already.
Absolutely. Thank you for that, Harsh. Both stocks actually, GSPL and Voltas are responding in pre-open rates. Sudeep, I'll come to you first on a GSPL, which is really taking a knock this morning, about 17% down in the pre-open session as it wraps up. What would you do over here? You're on mute, Sudeep.
Yeah. See, the kind of cut that we are seeing in GSPL, I feel one should just avoid and not do any bottom fishing, because the news because of which the cut is coming, I guess that will have a long lasting impact, and one should just avoid this counter for a while. And if someone is holding, then any rises, even post this gap down opening, if there is any slightest recovery also, then that should be used to exit, because lot of better opportunities are available, and this overhang will remain on this counter. So I feel making money in this counter would be a tad bit difficult going ahead.
Devin, you know, this whole segment, we saw this pain point with Mahanagar Gas also a few months ago. Now you have it with GSPL. The question is, what do you do when you don't know when the regulator could strike?
This is the risk that you have, Tamanna, in this business. Because maybe I think the government policies and the regulatory aspects, they are the two surprise things, I think, which always comes along with this business if we are an investor. So if you are actually looking at this company on a quarter-on-quarter basis or otherwise, I guess I think the disappointment could come in between quick times. As such, I think the commodity nature of the business always, I think, keeps you on the tenterhook. So to a greater extent, I think one will have to keep this aspect in mind while having this stock in the portfolio. To me, I think these subjects are best played when I think they are beaten down for buying, and they are best played, I think, for booking profits when I think they are at the rise and the market is fully buoyant about it. At this point of time, our view is neutral. We are not, I think, immediately jumping into this space. We believe that I think there is still some time left, after which I think one could possibly look at this space relatively more confidently than others.
Did you subscribe to the Vodafone Idea FPO?
I wish I had that kind of money. Sorry, but I think the fact remains that clarity is not enough for me particularly. I agree that I think the downside risk in this particular stock is limited because of the pricing factor at this point of time. However, I think my understanding says that it is a similar situation which is happening, which happened at one point of time with Bharti when they over-invested in the area of 3G spectrums. Today, I think Vodafone Idea is trying to put in the brave face by way of putting larger amount of money allocated towards the 4G and 4G related investments. In my viewpoint, I think when the economy has already started moving quickly and I think AI is dominating, industry is using IoT to its peak best and probably I think going to grow further. Entire computing space is growing. So I would rather think that I think the amount of investment has to be front-ended towards the 5G vis-a-vis I think any other. However, the limitation which Vodafone has and which I understand, they have 42% of their subscribers still continuing with the 2G and they want to convert them into the 4G. Otherwise, I think if they don't, then the competitors are going to take them away anyway. And most of them have anyway moved out. So this is where I think they're in a classic situation where they're fixed. So maybe I think they lean towards 4G vis-a-vis 5G. Whereas my reading says that I think they are quite late in investing in 5G. And if they further delay, I guess I think it is going to be a challenge. Another point which I would like to put across that today you are investing 45,000 crores.
Devin bhai, please allow me to come in because we are just 20 seconds away from market open. So we'll talk about this other point that you have on Vodafone in just moments from now. But just about the market starting trade. Remember, RK Forgings is down 5%, so keep that stock in mind, and Zomato is up 2% as well. So amongst the stocks that are moving around on news, those two also fit the bill quite effectively. But here come the first trades this Monday morning. Watch out for Wipro, HDFC Bank amongst the large caps, HDFC AMC, not the Nifty name, but on the large caps, and GSPL, GAIL, and Gujarat Gas on the flip side. Nifty 50 starting off 120 points higher, so not surprising, in line with what was estimated. Quiet start or 0.5% uptick, so not a bad start. Quiet relative to what the rest of the Asian markets are doing. Nifty Bank 0.8% considering courtesy HDFC Bank. Mid caps and small caps to start off well, about 1% apiece for both. So positive market breadth on open. The market's holding out for now. Let's bring up the heat map and show you what's moving and what's not. HDFC Bank should be right up here somewhere. Actually, no, it's not in the top 10 list. Quite surprising, really. HDFC Bank is not in the top 20 list either. Are my eyes fooling me? No, they aren't. It's not there. But anyways, HDFC Bank, whoa, it's the top loser. Quite surprising, really. I was looking for it in the gainers and it's in the losers list. So the pre-open rates were deceptive for HDFC Bank, 0.5% lower. But aside of HDFC Bank, everything else in the green. BPCL, 2.5% higher. Crude price fall impacting that. Ultratech, because of their India Cements transaction, is up about 1.5%. Axis Bank is in the green. Tata Steel, Adani Enterprises, Bajaj Finance. So a clutch of stocks moving up as a basket. I think newsmakers are BPCL and Wipro, which are in the green. And from a newsmaker's perspective, HDFC Bank, despite all the positive notes around it, is starting off in the red. But I dare say the biggest newsmaker of the day has to be around the oil and gas space, Tamanna.
Absolutely. Biggest newsmaker of the day is the market bounce back as well compared to what we saw maybe on Friday. So I just quickly want to see what the broader markets are doing before we get to specific stocks. And look at that, the Nifty Midcap also up about 1 percentage point. You're having a good morning here. The small cap index, if you can just quickly see what's happening there, also up 1 percentage point. A lot of stories today with responses and positive stocks. Let's start with Voltas. There was a UBS note that has upgraded it to a buy buy with an 1,800 rupee target price, a 40% upside. Stock is up about 3.5%, 4% this morning. Zomato, we spoke about briefly. They've upped their platform rates from 4 rupees to 5 rupees per order, and that stock is also doing very well. Zomato's anyway had a pretty good run. They've also suspended their intercity service where you could order from one city and get it in another. So maybe that was a good idea in hindsight. JSW Energy, we'll just take a look at what's happening over there this morning, also doing well. New Energy has gotten a letter of award from NTPC. Sterling and Wilson, we talked about this in our stocks to watch list as well, and that earnings impact has had a positive upside about 1.5%. Lupin is another interesting one to watch this morning. So they have launched this tablet in the US. It essentially helps with urinary incontinence. It's a slow release tablet, and that stock has seen a positive response, about 2.5% up. Myra Begron is the name of the formulation. GSPL, definitely one that we spoke about right before we started the opening session as well, and 20% down socket right now as we speak. Regulator strikes again. We should also look at what's happening in the other segments of this, other stocks in this sector. Gujarat Gas, one of them, GAIL, because that overhang will be there as well. Just Vodafone is what I'll quickly see. The FPO closes, and Vodafone is about 4% now. So initial positive reactions before the FPO, but the last couple of trading sessions have not been great for Vodafone. Samina, what else are you spotting this morning?
Some interesting gainers, Tamanna. Then the broader markets are looking good. So the sentiment is intact. The breadth is positive. Reactions coming into earnings are also largely in line or better than what the street was expecting. I'll start with OMCs because that's a little bit of a theme that's playing out. Remember, crude prices are down 3% last week. And that's a relief for the likes of a BPCL, HPCL and IOC. All those counters up 3 to 4% as we see it. IOC is up 2%, HPCL is up 3.5%, and BPCL is seeing a gain of about 2.5%. Senco is up 3.5%, so that stock does well. Elcon Engineering, bring that one up. It's had a good run on Friday. It was a top gainer in trade on better than expected earnings. There's also stock split around the corner for the company. The stock is up another 3.5%, adding to the almost 16% gains we saw on Friday. We will connect with the management in just a few minutes to understand what business looks like. But all in all, it looks like it's set for a good move in terms of stock trading activity today. 4.5% on Elcon Engineering. Well, Angel One. So capital market players are doing well once again this morning. Angel One had a good run on Friday. It continues to do well today as well. They're going to do a first ever bonus issue of shares. The stock is up nearly 18% over the last 5 days. So building on its gains from Friday in today's day of trade as well. Transformers and rectifiers is at upper circuit, 5% higher in terms of trade. Asset management companies, if I can get HDFC Asset Management, they reported numbers, and the stock is down 2%, but UTI Asset Management is actually not looking too bad in trade this morning with a 3% gain as I'm seeing it. Railway stocks are looking good. Angel One is having a good day. Persistent, good set of numbers came in from Persistent. Let's see whether the market same place, they're disappointed. Not sure why that's happening. Like we said, this could be a play in terms of the stock valuation. The counters up 80% last year, one of the best performing mid-cap IT names. So of course the earnings, while they were good, probably don't justify the valuations for the street. So Persistent getting a thumbs down with a cut of 2.5%. Bombay Burma is up 6%. You want to take a note of that. It's a trading company, it's a holding company, but 6% higher on Bombay Burma. It is turning out to be your top gainer in terms of stock performance. On the sell side, you've got Sun Pharma, Vodafone Idea, Ramakrishna Forgings, HDFC Asset Management that are highlighted, Sona BLW, Indus Towers. Those are a few that are having a little bit of a down morning in trade.
Yeah, Sun Pharma Advanced Research, by the way. Samina was trying to point that out, and that stock is down 5% yet again. This must be what, the 12th straight day of a low circuit, maybe for Spark. So that stock certainly. But GSPL really takes the cake. And Devin, I know we have yet to talk about Vodafone, but I just want to come to you. Firstly, belated birthday greetings as well. But here's the question. does this GSPL move become an overhang on some of the other PSUs as well? Gujarat Gas, GSPL holds 54%, some of the others. Is there an overhang on those two now?
Niraj, sorry. Thank you so much for the birthday wishes. Always welcome any time of the year. Of course, I think the overhang will continue to a greater extent on this particular space, as I was making a point, largely because of the fact that you as an investor, you have relatively very little role to play, frankly, because the decision makers in form of authority or the government policies, they rule the entire space more often than not. At the same time, I think the very nature of commodity business that we are into, they will definitely, I think, going to have its own volatility and predictability. I guess I think will continue. So all in all put together, I think this situation is not going to change. So to me, I think those who are buying into this particular space, they'll have to be, I think, put to a positional trading in their portfolio. Buy when I think the market is on the negative side, and I think probably look around for the opportunity when I think you get one during the rally. So that is where you book your profits. Otherwise, I think this kind of story is difficult to, I think, justify from the point of view of long-term investment point of view on a compounding basis, because many times I think your compounder theory will not work here. Maybe I think it will even out in a difficult situation. So unfortunately, I think we don't carry very strong portfolio position into this particular space either. So we are relatively safe as far as I think our investment approach is concerned in this space.
Sudeep, have you spotted anything for a trade this morning? I mean, big gains, big losses, but any opportunity for an intraday trade?
Yeah, see, this one stock that is just coming up on my radar, and I feel that stock is in an overall uptrend, was consolidating within last 6-7 sessions, and we are witnessing a fresh moves there. That is BSE Bombay Stock Exchange, and the stock has been sustaining above its 10-day exponential moving average since last 7-8 sessions and was in a prior uptrend. So I feel from the current levels, BSE also can be looked upon from an intraday as well as from a positional perspective. And overall supports are at 2770 zone. Until this support zone is held, I feel overall the upside in the stock could be in the range of 2930, 2950 in the next few sessions.
Right. That's the BSE, and the stock's already doing quite well. It's up 3% as we see it. Constructive call on this one from Sudeep. Devin, I want to talk to you about some of these PSU defense names. Just ahead of elections, the party year seems to be never ending in some way. I mean, look at an HAL. It's gone all the way up from 3100 to 3800, one-way move. Mazgaon Docks, BEL, all the names, BDL, all looking very, very solid. The index itself is up over 15%. Is there any opportunity in these defense names if a trader, a medium-term trader wants to come in and play the elections? Do these stocks still offer an opportunity?
Yes, I mean, the traders definitely, I think, will have momentum to support them. And I think this space is likely to be supported with a huge amount of momentum, largely because of the fact that government's main program of Making India is happening at a very rapid speed. At the same time, never before in past, I think one has seen this kind of order book inflows into these companies that gives them a visibility for larger amount of business going forward. Only challenge that you might probably see that even though the large order books that they have, whether they would be in a position to execute above threshold level of say 15 to 20%, I think that is something which one will have to definitely ask the question. Generally, these businesses, they take time to execute, and that's where probably I think one will have to be mindful about the situation, not about the demand situation, but execution part of the activity. Definitely is something which these companies are facing the challenges. Given that situation, any valuations which happen ahead of time, and if you pick out on the valuation, quite possible that I think this particular situation may keep your portfolio dragging for a while. In my viewpoint, I think again the rule applies here that when the market neglects this kind of counters or the valuation becomes cheap or competitive, then probably I think it is a better time to buy. Chasing momentum would be a good idea for traders, I think, because they can get down also very quickly since they are momentum players.
Some big movers this morning. Just pull up Areda, about 8% up on its numbers. IFL Finance doing well as as Interglobe, not too bad at all. Sudeep, I just want to come to you on anything specific you're spotting, and what would be the call on RIL? You have numbers coming later today. Is this something that you'd look at for an intraday trade?
I would avoid RIL from an intraday perspective because positionally the trend is very strong. We've seen a prior uptrend since December month. Stock from the lows of 2300, 2350 has moved all the way up to 3000, and the entire March and April month till now, we have seen the stock consolidating between this 2800, 2830 and 3000 mark. And specifically in the last 10 to 15 sessions, it is consolidating in a 2.5% range. So I feel from an intraday perspective, I would not be too keen on going long or short here, given the fact that the results are going to be announced. But positionally, I am constructive, and I feel that the trend is quite strong, and any dip could be bought from a positional perspective. So overall, the stop loss for any long positions should be 2850 on the downside. And I feel the stock is headed up to 3150, 3200 in the next few weeks to come.
Okay, gentlemen, afraid we'll have to leave it at that, but thank you so much for taking the time out and being with us and giving us your perspectives. Really appreciate your time this morning. We'll need to slip into a very quick break on the note. The markets are doing okay. Don't go anywhere though. Two very exciting conversations coming up. Elecon Engineering, the stock is on a roll, good results. Management joins us on the other side, and a bit later on, we'll get in AK Tiwari of PNGRB to talk about the decision that they've taken.
All right, company in focus this morning is Elecon Engineering. The numbers have been good and the stock has been running up on the back of their Q4 results. We're speaking to the management this morning, but just before we get to that conversation, a quick recap of why the enthusiasm. Revenues were up 33% in Q4 year on year at 564 crores. EBITDA up 46%. So quite a jump there. Margins have increased 213 bips and net profit up 52%. Their material handling equipment MHE segment seems to have contributed to that revenue jump. Kamlesh Shah, Group CFO, Elecon Group, is with us on the show today. Kamlesh, very good morning to you. Great to speak with you. Can you explain what has changed or what has turned around in the MHE segment that revenue is up about 93%?
Both in India as well as the overseas level has contributed as well. And though there are challenges in the overseas market due to the disruption in the on account of geopolitical situation, still we are doing well, and we are quite confident about our overseas business. In India, particularly if you say material handling division, they are now getting a traction, considering the improvement and demand coming up across the sector, but more particularly for cement, steel, power, and fertilizer industries, where we are getting a good traction. And we see that this fourth sector will become a growth driver for MHE division of the company. And so far as gear is concerned, gear, I think we are quite focused and we are going on the right track. And that definitely will give a good boost to us.
Yeah. Having said that, your full year revenue, of course, has grown 33% this quarter, but your guidance of 2,000 crores was not quite hit in this last quarter, even though Q4 was good. Are you maintaining the same targets now, Mr. Shah, or are those being revised?
So if I give about the guidance, we miss what you would like to say about 2,000 crore vis-a-vis actual what we have still 1,937 crore. Yeah, on that thing, there was a one incident related to the deferment of the supply. That is one thing is there. However, when we prepared our 2,000 crore guidance, generally we prepare in the Q3 of the year for the coming year. During that time, the steel price was at one particular level. And if you compare the steel price from December 31st, when we prepared our guidance, vis-a-vis when it was there by December 2023, the steel price has came down by 5%. So if I make a reverse calculation, I believe that we have achieved the target what we have given of 2,000 crore.
Kamlesh, taking a cue from that, this is Samina as well joining in. As we step into a new financial year, what are you guiding for? What sort of growth can we expect in terms of top line and bottom line for FY25?
This time, for console level, we are targeting the revenue of 2,225 crore, which you can say a 15% growth. And our EBITDA margin, we are expected to sustain at the level what we have already achieved this year. There is a scope of improvement is there. However, we are given the guidance, which is quite conservative this year. This is due to the election situation both in India in the first Q1 itself, as well as the election in the US. And further, considering the escalation in the geopolitical situation now, which is going to impact or which will have the material impact on the supply chain issue.
Right. So there is that 15% growth on top line that you're expecting, and there could be some upside risk. Is that a fair assumption, Mr. Shah?
Yeah.
So 15% is conservative. Also, talk to me about margins. You've managed to do a pretty big improvement on your margin front, close to 24% now. Is that sustainable, and is there any sort of risk to that number in the next couple of quarters, or FY25 you will maintain margins at 23-24%?
On an annual basis, we shall maintain the margin of 24% on the console level of our EBITDA margin. And we don't find any challenge to achieve that. Even with this conservative growth of 15%.
Kamlesh, any upside risk if we manage to get that 15% on your top line and your export market recovers and the MHE segment does the bigger contribution in terms of growth for next year, do you think margins could go upward north of 24%?
It is there is a scope, some little improvement we can expect. However, we considering what we are given the guidance earlier, also we are still going on the same track. We have certain things on the OPEX side, which we have to do, particularly on the brand building and the business development team, which we have to strengthen further, considering the OEM markets as well as the replacement market. So we would like to at least now make a segregation of the two teams within the business development team. So that is also our quite focus areas.
What is, Mr. Shah, can we get a sense of your order book positioning? Which segment are you focusing on going forward for the next financial year and the next few quarters? And also your geographical mix?
In terms of the product mix, we are getting the traction from steel, cement, power, material handling, and fertilizer. These are the five growth driver will be there. And if the monsoon is good, we will also get a good traction from sugar sector also. And if you see about the geography wise, we are going to get a good traction from the Europe itself, and we are quite confident and we are very hopeful and optimistic for the European continent to give a good boost for our revenue coming year.
Okay, just give us a sense of your capex plans as well. Since we're speaking at the end of this financial year and setting up for the next one, are you continuing with your 300 crores sort of outlook for the next 3 years, or are you upping this?
Yeah, we are just going to close our 300 crore capex this year, which we have started 2 years back. So this is the third year, and all the machines what we are expected that will come, and that will also give a good boost for improving our efficiency. So now we are just going to get the where presently we are having the gear, the daily manufacturing to what we are going to go next. With the target what we have set for us, my gearbox will be out within 10 days to 7 days also. So that is where we are planning, and we are very clear and optimistic about to roll out this. And by the setting up this 300 crore of our capex target, that will be achievable by FY 2026.
Right. So, Shah, up to your order book, I know looks fairly healthy, but there are lots of moving parts. There's the concerns on the geopolitical front. There are elections back home. How does that impact your orders getting converted into revenue? I really want to understand if you're anticipating any breaks, pauses, or delays in cash flows. Because I know your debt portfolio looks extremely healthy. You've been very conservative all along. But I just want to get a sense of working capital and where things stand, and if there could be any delays in terms of payments.
So all front we are, I think, working. That is how we are, based on, because though we are supposed to give our guidance in the last Q3, but we are defer that to give in Q4. That itself shows how we are matured about our, when we are giving the figures to the investors community, to the other financial institutions, we are quite conservative, and we don't foresee that will have any such kind of challenge. Even this geopolitical, we already discounted all these factors. What presently we are facing, that same election in India in Q1, in the last quarter, what we are expecting the election in the US as well, the current geopolitical situation will got escalated further. So with all these things, we say yes, we would grow by 15%. But if this if this situation is getting settled down, particularly geopolitical situation, which presently got escalated, if it for any reason, if it is able to get it tamed down, then I will have the further scope of improvement available.
Right. So it looks like better margins, better order book growth of 15% for FY25, little or no debt. Anything that's keeping you awake, Mr. Shah? Any sort of concerns that as an investor one should be mindful of? I know you're benefiting from the tailwinds of sector growth, but I know you're pushing growth for some of your subsidiaries has been a challenge recently. Anything that we should keep in mind as we look at these numbers and look forward?
We are getting, in fact, we don't foresee that any a bad thing is going to have, at least which will have the material impact to us. What we are looking for, there will always be a new geography which is helping us to grow. And that is what we put on our risk side. So we are very clear and, in terms of how we should focus, particularly on the cash flow, particularly on the risk of the business and other factors which are going to have the impact. So the team is, quite, what we call it our steering team, which is quite, robust enough by getting this kind of inputs. And now we can afford to get such kind of inputs, which help us to make our figure work quite accurate about. I cannot say that I will be 100% sure, but we will always be near to our accuracy level.
Okay, and in terms of newer geographies, you spoke about Europe. What are the other sort of details that you can give us, Mr. Shah, or is the focus going to be most of your revenues coming from India? Is that where the focus is going to be?
No, revenue from India is already there. We are quite, if you say we are in a leadership position for both material handling as well as for the gear also. Material handling, yes, as per our business strategy, we are not going for the turnkey projects. Though the customer are insisting us to, move forward for the EPC, they are looking for us, why you do not participate in everything. But we have put our stand very clear. No, we are ready to support you if the order is for the supply of equipment on. And that is what we are getting, that the stream of order in that post. In the recent quarter only, we got a big order from the steel sector as well as from the cement sector also. The same is there for the power sector, which we are sure after the election is over. Once the the election protocol is over, we will definitely get that traction also.
Okay. All right. Thank you so much for speaking with us. Kamlesh Shah, the CFO of Elecon Group, talking about the numbers for FY24 and the outlook as well. We'll take a very short break. On the other side, we're focusing on what has happened with GSPL. We speak to A.K. Tiwari, member at Petroleum and Natural Gas Regulatory Board, about the tariff cuts and more. Stay tuned.
I do hope all of you are going to go out and cast your vote, and especially the youth of the country. And the youth and the corporate citizens, people who work in our urban centers and companies. We are the, in many ways, we actually are the generation which is going to build the country. Our parents spent their whole life building roti, kapda, makan for us, and our grandparents fought for independence. So it's actually our responsibility and our destiny to build the country to the India of our dreams. And we do that by working hard every day, but we also have to do that by participating in India's democratic and political process. And it's the world's biggest festival of the power of a vote and the power of a citizen. So I do hope all of you get out and vote. It is not just our responsibility, but it's also our core participation in building the future country of our dreams. And I am today pledging to vote. My vote is in Punjab on 1st June. So I'm pledging here to vote, and I do hope all of you do the same. So I'm going to just sign this pledge to vote.
Well, in a setback of what some brokerages are saying is a setback of epic proportions, PNGRB, the gas regulator, has sharply cut tariffs for GSPL's key HP pipeline network in Gujarat by 47%. This is much higher a cut than what was penciled in by the analyst community and by the companies asked themselves. Mr. A.K. Tiwari is member at Petroleum and Natural Gas Regulatory Board, which is PNGRB. He joins us right now to talk about the reasons for the cut and what are the implications of these assumptions for the future as well. Mr. Tiwari, thanks so much for joining in. Most people are penciling in that the key reasons for a cut are lower capex assumptions and lower opex assumptions by PNGRB versus what the company or the street was factoring in. Could you dwell upon this, sir?
Yeah, good morning. Good morning, Niraj, Tamanna, and all the viewers.
Thank you.
Two things I would like to share that we have, as per our regulations, we give the 12% post-tax IRR. So that is always maintained, number one. Number two, we have recently concluded the capacity assessment of not only GSPL, but all other entities, GAIL and others also. So that way the capacity assessment has been done, and the reduction of this tariff are combination of capex which has not been which was earlier envisaged has not been done, OPEX also, and some of the capex we have already taken for spur line, for Swan and Chara terminals and all. So that way we have maintained the post-tax IRR of 12%, and since the volume was earlier envisaged and in the tariff order was lower, and where the volume was more than 26 MMSCMD. So that way all these adjustments has led to reduction in the tariff. But PNGRB has always maintained 12% post-tax IRR. So that is there.
Mr. Tiwari, the lower OPEX, now, if I'm not wrong, you're saying that because most of the country now comes under the CGD licenses, the OPEX for the future for most companies will likely be low. Is that a safe assumption, therefore, that anybody trying to bake in a higher tariff because of high OPEX cost over the course of the next 3, 5, 7 years is not going to be the case?
See, even the assumption of the OPEX is there. What is the actual expenditure? What is the actual OPEX which has been done? If somebody assumes that this is the capex, they can plan. But if the capex is not done, so that way the adjustment will always be there. That true up will always be there. So that way, whatever the actual expenditure has been done, that way we have already adjusted, and the reason for these cuts are mainly on account of these.
Mr. Tiwari, good morning. Tamanna here. What is, I think, I wouldn't say astonishing, but a little difficult to understand is the gap in the assumption by the company and the assumption by PNGRB. In some cases, it's nearly half. Whether it's capex, future outgoing capex or operating capex, even volumes. Why is there such a discrepancy? Where is that coming from? Is there an incorrect assumption on the part of the company? Are they overestimating? Or can you help explain that why is there such a big gap on the assumption? Because that's what's really, I think, taken everyone who watches this space by surprise.
Yeah. See. One is the future capex and future OPEX. So for the future capex for the Swan terminal, Chara terminal, as well as the other spur lines we have already taken. For OPEX, what was the trend earlier? That way we also see whether that is correct OPEX which is presumed or not. That we also calculate, and we give the reasons for that. Similarly, if the OPEX and capex which was taken earlier, and if that has not been achieved, so that we true up that way. So what I want to say that 12% post-tax IRR has always been maintained, and that detailed tariff order which has been uploaded gives the total reason for that.
No, Mr.
So
Tiwari, let me reiterate my question. I'm not saying that there's no detailed reasoning being given. I'm not saying there is no margin of error. I'm not even saying that your reasoning is incorrect. I'm just trying to understand if your reasoning is correct. Did the company overestimate in the first place? How can there be such a big gap? Clearly, one side has gotten it wrong.
Yeah, I think there was some assumptions which was escalated, so that way it has been done.
Sorry, assumptions were escalated?
Yeah.
Okay.
Mr. Tiwari, two questions. I still come back. So therefore, because the country comes under CGD licenses, independent of what capex has been done, would assumptions over future OPEX need to be lower from companies' ends?
See, OPEX depend upon the various factors which are there. So based on the trend and based on there are the 4.5%, we always escalate that way. So that way it is given to all the companies. If there is any OPEX which are to be allowed and has been done more, we allow that way. So that way, I think these assumptions, these data has been taken that way.
Okay. Would there be, based on the assumptions that PNGRB has made, or the calculations rather, that the PNGRB has made for this order of GSPL, are there implications for some other companies as well? There's noticeably some thought that there could be assumptions that will be were assumed for GAIL as well, and those could come out at some point of time.
No, there is no connection between the GSPL and GAIL and other companies. It depends upon what way the data has been given, what way they have achieved, what way they are able to achieve the capex and opex which have been there. So there is no similarity for that way. The GSPL tariff and GAIL tariff, the same principle will apply everywhere. That is not a
do you typically see?
We can't say that way. Proportionally, that will be there.
Do you typically see a big variance or such a large variance, Mr. Tiwari, or is this a one-off? That's, I think, what we're trying to understand.
In case of
when we're talking about a GAIL, etc., do you typically see such a large discrepancy or such a large difference between what the company is assuming and what you are assuming?
At present, I can say that there will not be any much variation, but it depends upon the GAIL. We have recently concluded the integrated tariff, so that we have already trued up. Based on the EIL capacity which are there and the other things, we will come up with public consultation and then we'll do. So I don't think, I can't commit that way, but that will not be a variation.
So on an average or typically or ordinarily, you don't see such a big variation. Would that be safe to say?
Yeah.
Okay, Mr. Tiwari, just one final question, from my end at least. What I was trying to ask was when it comes to GAIL or some of the other companies as well, because GSPL had assumed a gas price of $12 per MMBTU for FY24 with an annual escalation of 4.5, and because PNGRB has considered 11 for FY24-25 and 7.6 or 7.5 for FY26. Would these revised assumptions for GSPL apply to GAIL, and therefore could there be an impact on GAIL's this thing as well?
Yeah, sure. We apply same principle for when we revise the tariff of the GSPL. That is not a we'll give.
Okay.
Same principle. Yeah.
Fair call, Mr. Tiwari. Appreciate you giving us this clarity.
Just one thing I would like to say from my point of view. See, Government of India and PNGRB has created ecosystem of gas-based economy. National gas grid, authorization of the CGD, LNG terminals integrations, and so many other things are there. And wherein we have come up with the regulatory reforms, fiscal reforms, tariff reforms. So all these ecosystems have been created, and these companies, GSPL, GAIL, are performing well. And that way, we are going to ensure that their post-tax IRR of 12%, whatever is there, they should get it. So that way PNGRB is very proactive, as well as we are considerate, and we have come up with so many regulatory changes in the interest of the entities and companies. So that will continue.
Okay. Appreciate this conversation, Mr. Tiwari. Thanks for taking the time out and being with us.
Okay, thank you.
That's PNGRB. And GSPL is down 20%, but I must say GAIL too is down about a couple of percentage points today.
I think the big takeaway for me was that there might have been an incremental assumption from GSPL, because that really is at the crux of it. How do you have such a varying version of what something would cost? Anyway, markets are off their highs, but I must say Wipro is chugging along nicely. Just want to pull up a Wipro this morning, and the stock up 2.5% now, near its morning's high, after being completely drubbed by a lot of brokerages and analysts once its numbers were out. Wipro not doing too badly. I just want to see what HDFC is doing meanwhile, where it was absolutely the reverse, where the outlook was fairly positive, at least before market open. Stock down about 1% right now. So all in all, markets in positive territory, but off their day's highs by some extent on the Nifty. it's looking like overall a pretty decent morning. We'll take a very short break. With that, it's a wrap on India Markets Open. But stay tuned. Up next is Talking Point.
In this election, let us take a pledge to vote. I shall be there exercising my right, standing in the queue to get my turn to vote in the election. We sometimes underestimate the value of the right that we have, but just think about many countries which are ruled by authoritarian rulers. The citizens of those countries have no right to vote. In our country, we choose our leaders, we decide who is going to be ruling the country, and it is something which is both a fantastic right, privilege, and we should also see it as our constitutional duty. So this election, I am going to be there, and I hope you all will join me in casting your vote too. Thank you.